Welcome traders to another episode of T2 SMC Trader. In this video, you are going to learn about the bias. How do you know which way market is going for? Now I make the thing simple and I always try to make things simple. So it's gonna be very simple, very easy logic. If you can follow that logic, your trading will be much more easier and you will be easily will be able to catch the move. Okay. As there is the price action from the Wednesday morning session, I will explain over here the price action and I will explain how you are going to Hey traders, welcome back to another episode of T2 SMC Trader. In this video, I am going to make the thing simple, okay? You will learn how to find out the bias in an easy way. So you have to watch until the end. It's gonna be a small video, I believe, and this is the price action from Wednesday morning session where we had a news feature power. I would love to explain the price action and I would love to show you how you should go for sell or you should go for buy. Make sure that you have given me the likes, and if you are new, don't forget to subscribe to my channel. This is the 15-minute chart from Nasdaq. Now 15-minute chart is my bellwether. I don't need 4-hour chart. Some of you in my live started to talk about the 4-hour chart. I actually simply avoided your comments, but it's not that much complicated. These ICT things are so simple, but you guys are making this complicated by using so many things. Don't do that. You can see market was going higher. When market was going higher, how it was going. This is relatively equal lows from 15-minute chart. Here, this low came very near to that low, that relatively equal lows. Fail to take that on. Keep that in your mind. Okay? Then market went higher. It was extremely bullish. This is the time around the 10 a.m. Fed chair Powell speak. Now, most of the time, Fed chair Powell will actually make the choppiness in the market, and when I will be in 1-minute chart, you will see there is a very nice choppiness. This is minus 2.5 standard deviation from the monthly chart. My expectation was market is going to that minus 2.5 standard deviation. Now you had this sell side liquidity below, above this sell side liquidity, you have this sell side liquidity. This is also relatively equal lows. I marked that low because in my live streaming, when someone was talking about the London session low, I just told that session liquidity is something else you don't understand, because when market is going to take the session liquidity, it's different thing. I will explain that the way I explained previous day liquidity. I will explain the session liquidity as well. Okay, but it will take little time because you are not ready yet. So this was the relatively equal lows. When market came very near to that relatively equal lows, I told that history repeats. That means this thing is going to repeat over here. So I am bullish. I'm not bearish until this minus 2.5 standard deviation. How do you know that market is going for that sell side liquidity or maybe this sell side liquidity? If you see from 15-minute chart, after that big bull run, look at this big bull run. After that big bull run, if you see there is a bearish parabola from 15-minute chart, then and only then you can expect that market is going to reverse from that 15-minute bearish parabola. There can be a breaker block, there can be a order block. If you get something from your higher time frame, my advice is to look for a bearish parabola because that is the easiest one. Okay, so if you get a bearish parabola, you will start to think that market is actually going to fall. It's not going higher. If market really would love to go higher, it's not going to make the bearish parabola. So until you don't see the bearish parabola, you will keep looking for buy. Even if market went lower, take this liquidity, I will still looking for buy. Here is no premium and discount things. This is just a simple logic. After that big bull run, you have this sell side liquidity, that sell side liquidity. If market would love to fall, it should fall from a bearish parabola. If market doesn't make the bearish parabola, you should keep looking for buy. Now, maybe it's not at the all-time high. Instead of that, you have some price action over there. In that type of situation, there has to have any kind of relatively equal highs from 15-minute chart. As I don't have that 15-minute liquidity, instead of that, this is the all-time high and that minus 2.5 standard deviation. That was my target for the morning session and I was expecting market to go for that. This is how I make my bias. I didn't say not even one time in my life that market is going to fall. Instead of that, I keep telling that I would love to look for buy, look for buy, look for buy. Now let me go. Let me show you some some more things over here. Now you have already understood the history repeats. This is relatively equal lows, market has made the strongest liquidity. This is relatively equal lows, market has made the strongest liquidity. At the same time, this low reached until the last fair value from 15-minute chart. Now if I mark this fair value from 15-minute chart, you will see that there is a very small, it's a very small fair value, but still it's valid because this 50-minute only 50-minute last fair value. So it reached until this 50-minute bullish fair value over here. At the same time, if you would love to mark the order block around that area, this is also the order block. This is the propulsion block. It has traded that propulsion block. I don't need to see over here this all things. Instead of that, I have this bullish last fair value from 15-minute chart. It's enough for me to think that market is going to reverse from there. Keep that in your mind. I'm not going to frame my setup from a random level, not from 1-minute chart setup. I am framing my trade from 15-minute time frame. Now I'm going to 1-minute chart. Now in 1-minute chart, when market dramatically fall, you can see that market has taken this liquidity, this low. Let me mark that liquidity from this low and that low. They are relatively equal lows. Market has taken that relatively equal lows, tapped to this 15-minute bullish fair value gap. At the same time, it has traded the 1-minute last fair value gap. Let me mark the 1-minute last fair value gap. Just a second. Okay, I'm trying to make this video very small, and I believe that I'll be able to do that. Okay, so this is the 1-minute last fair value gap, and you can see nobody worked with the lower portion of that 1-minute last fair value gap. It worked with the upper portion. After trading this area, market has made a swing high, which is valid for shifting market structure. So this swing high is valid for shifting market structure. I would love to mark that as my market structure shift. So this is my market structure shift. After shifting the market structure, there was my fair value gap. So let me mark the fair value gap as well. Here, there is my bullish fair value gap. I'm going to remove this liquidity level from which has taken already. So I'm going to remove that. You can see market has tapped this bullish fair value gap over there. Then finally, the lowest down close body close candle is going to be your order block. So this is your order block. Okay, let me mark it as my order block. And at the same time, why market reached until that area? Mark the mean threshold of that order block. That means the 50% of that order block. So over here, this is the mean threshold of that order block. Market has traded that mean threshold of that order block, then went higher, made this propulsion block over here. So let me mark it. This is the propulsion block. I'm just renaming it by order block. Okay, but this is the propulsion block. After trading this propulsion block, boom, market went higher. Now my target should be, I should take a partial this last fair value gap. This is the last fair value gap. I should take a partial over here and see these highs over there. This the high over here and over here. Any of this high can be your last target. Okay, so your entry should be over here to this bullish fair value gap or the setup fair value gap. Your stop loss should be below this swing low or the candle has made the liquidity. So you can put your stop loss below that one or below this swing low. There is nothing wrong. Your target should be here. I'm just marking this high actually. And also if you would love to mark that relatively equal highs from 1-minute chart, you can target over there as well. There is nothing wrong as well. So let me just mark it as a buy side liquidity over here. You can target that on-minute buy side liquidity. As you're going to take a partial over here, then you will put your stop loss to the break even, and you don't need to worry about the rest of all the price action. Okay, above this swing high, you had relatively equal highs over there as well. You can target those as your extreme target. There is nothing wrong at all. And finally, you can see market has reached until this minus 2.5 standard deviation. We'll see what is going to happen later. But here, this was the setup from today's morning session. Some of you will say that, no brother, there was no setup or there was nothing. Oh, it's bullshit. Because this is a perfect setup from morning session. We were live and I explained everything over here. When market was falling, I told that why you should not look for that sell. Every sell setup is valid if and only if you get a bearish fair value from your 15-minute chart. Now, just compare it by yourself, which was more easy to catch, the buy run or the sell run, which was more obvious to you. Okay? This is your job to think which is logical to you. So guys, this is how I actually look for the bias. I make simple way the bias. I make it simple. I hope that it's gonna be insightful for you guys. If it is, then don't forget to give me the thumbs up and don't forget to subscribe to my channel. Until the next video, cheers.